In the past week alone, the Ethereum blockchain experienced a ton of technical challenges. Meme coins are raising millions of dollars. Pulse Chain, after so many years, was announced by Richard Hart, is finally live. Binance exit Canada and possibly the US, and all while a single Twitter user crashed the price of Bitcoin by almost 5% from the simple mistake. As we know, crypto moves really fast and it can be hard to keep up with. That's why I'm testing out this new series on my channel to bring you all the latest information from last week's news, with everything that happened in macro, the markets, new DeFi projects that are launching, and the latest in NFTs. What's up YouTube? Welcome back to my channel. If you're new here, be sure to hit that like button and subscribe so I can bring you the latest alpha every week. Come join our completely free community Discord, as well as all the links and timestamps will be below in the description. But let's get into it. Here's everything you missed last week. Starting with Bitcoin's price action, it's not been a good week, especially for altcoins. Taking a look at the charts here on the daily candles, we have almost 7 red daily candles. We finally are getting into the weekend here. We're starting to see a bit of green. It will be interesting to see how next week goes. Looking at Ethereum's price action, same story, right? Multiple red daily candles. I even had this tweet pin here from GCR, who started to encourage people to take profits. If you don't know GCR, go give him a follow, a truly godlike trader. But I actually did take some profits here when he tweeted out, and things kind of haven't been looking too good this week. Finally, the last interesting chart I want to include is going to be the ETHBTC chart. Obviously, it's been bleeding against BTC for many months now. Hoping to see a reversal of this soon, as now we've gotten past the Shanghai unlocking and things starting to look a little bit better for macro. Looking into macro, I really wanted to highlight this tweet from Genevieve, who's showing the US credit risk is skyrocketing and it's looking a lot like an emerging market, maybe like Mexico, Greece, or Brazil. And this has to do with a lot of Biden versus Republicans in the standoff right now with the US debt. Now, Treasury Secretary Janet Yellen is warning that we could run out of funds and hit the debt ceiling by June 1st, which is just a few weeks away. And while very few people truly believe that the US won't be able to pay its debts over the long haul, even this disruption could send chaos into the markets and really have a large ripple effect if we're not able to resolve things soon, which is why you're starting to see this spike. Another piece of news I thought was pretty interesting this week is an Abu Dhabi royal firm shorts billions of dollars of US stocks as they are predicting that the US could enter a recession. One of the things I thought was pretty interesting here is you can see that the firm is also investing more in commodities and crypto. Finally, here we have this article from the Wall Street Journal written by Nick, who is said to be the Fed whisperer, that is saying that the April's latest inflation report reinforces that the Fed may plan to pause. We've seen inflation successfully start to slow thanks to the Fed tightening rates, and it's predicted that the Federal Reserve may be taking a summer vacation just to evaluate, right? They've done all this rate tightening, they've raised it continuously, so maybe it's time for take a step back and see how things play out and see if maybe they've done enough at this point. This week in crypto news, a lot of things happened, including how just a single Twitter user was able to crash the price of Bitcoin from a simple mistake. Beetlejuice is a researcher at the block, and they put out a lot of great information. And what we have here is a screenshot of Arkham, which is an intelligence platform to track the movement of crypto. And Beetlejuice put out a tweet saying that looks like the US government Bitcoins are on the move. And the US government does hold a lot of Bitcoin, and they have said that sometime in 2023, they are looking to sell them. With this knowledge, the market started to instantly dump and react, and we have Arkham replying here that they don't see anything on their end, and everyone started to get really confused about if these Bitcoins were moving or not, and if the government was selling them. And if we look at the chart of Bitcoin here and match up the timing, we can see this massive candle, about a 5% drop. But as the market realized that the US government Bitcoins were not on the move, you can see here it recovered over the next few hours. So I guess the question is how did this happen? Very quickly, right, we had people looking at on-chain analysis, people like ZachXBT mapping out the Bitcoins and showing that there had been no movement. And ultimately what happened here is that Beetlejuice admitted that he had an internal label that was incorrect, and that he of course apologized for spreading this misinformation. But a lot of people were upset because there was over $100 million in liquidation from this false news rumor, which started with Beetlejuice. But that's not fair because this could have happened to anyone. It's a really simple mistake, and it's really not on Beetlejuice that if the market reacts, even from a simple tweet like this. To wrap this up, both Beetlejuice and the blog continue to put out high quality information, and it's one of my favorite go-to sources. But let's move on from this one. On the topic of Blockworks, they did go on to raise $12 million at over a $100 million valuation. This is fantastic. Again, I think they are an incredible resource, so awesome they were able to get this funds. Coinbase has onboarded millions of people into crypto, and it's one of the few companies and teams out there that's really fighting for the core values of crypto to remain. Just this week, we have the US Chamber of Commerce filing a brief of Coinbase versus the SEC, calling out the SEC for acting unlawfully in the digital asset space, and this is huge. The US Chamber has massive influence and power, and they state in the brief that as it stands today, nobody knows for certain what is a digital asset and what could be considered a security. And they make the argument that regulatory uncertainty is killing innovation in the US, and that's why you're seeing more and more companies start to leave the US and go offshore, which could really have the US miss out on the next trillion-dollar industry and thousands of jobs. We can clearly see that innovation is leaving the US as Coinbase launches an international exchange for Bitcoin and Ethereum futures, as well as Gemini exploring APAC regions. Even though this isn't the US directly, we see a theme among Western countries being very hostile to crypto, and Binance announcing that they're going to be withdrawing from the Canadian marketplace and leaving Canada. And on top of the lawsuit, we also have Congressman Brad Sherman hammering the SEC for its relationship with DCG, Digital Currency Group, mainly all the problems that we've been seeing with GBTC. We can see here that Brad Sherman points out that over 850,000 retail investors are trapped in this, and DCG has been fighting as well to get an ETF approved. And if we look at the current GBTC discount, we can see that it's still almost negative 40%, which is massive. This week, it was also announced that two massive market makers for crypto, both Jump and Jane Street, were looking to potentially exit or at least significantly decrease their responsibilities. We can see here that both firms are agreeing to not abandon the crypto industry entirely, but Jane Street is scaling back its global crypto, while Jump Crypto is also pulling back from US markets. In the short term, we could see some pain as volume drops or assets being sold off, but in the end, I think it's going to be beneficial because there's a lot of people that could come in with money and fill this hole. But Jump in particular hasn't been a great ally for some of these crypto projects, so it'll be interesting to see what happens from here. And talking about Jump Trading, it looks like they're going to face a lawsuit over their $1.3 billion in Terra USD. If you all remember, about a year ago, UST we saw collapse to zero, about $70 billion wiped from the markets. So it'll be interesting to see what happens with the case maybe like this. You can see here that the lawsuit alleges that Jump had involvement in manipulating the price of the stablecoin, hoping to reach its value of $1. So we finally are also getting some updates finally on the BlockFi bankruptcy. We all know that multiple players in this space, including Celsius, BlockFi, and Voyager, all experienced bankruptcy during the fall of around last year as well. BlockFi also released some information around their Chapter 11 and what people can start to expect. We can see here in the timing of distributions, they're still going over Alameda and FTX as counterparts, hoping to recoup some funds, I'm sure. It looks like in wallet clients, these people in connection to the wallet program will be paid out in full, which is obviously a win, as well as talk about some client releases as they look to claw back some funds of people who might have made transfers right before they shut down. This is obviously going to be very upsetting, I'm sure, for quite a few people. And while BlockFi is handling its bankruptcy and we're seeing banks go belly up, it looks like Tether's the real winner here at its reserve surplus at almost $2.5 billion and up a $1.48 billion in net profit. Absolutely wild. I also thought it was pretty cool that MetaMask is actually now introducing a buy feature with PayPal. And if you look at PayPal, it looks like they finally disclosed that they hold almost $500 million for Bitcoins for customers, which is really interesting to see. Wouldn't actually expect this coming from PayPal, but that's awesome that they're able to introduce people to crypto who maybe didn't have, other means. As we see people continuously flee these centralized exchanges, we're seeing Uniswap be a huge winner here as the trading volume climbed above Coinbase's in February. Although, of course, markets haven't been looking too good. Everything's overall in a decline, but this is pretty awesome to see. We're going to start off the DeFi section with probably the most insane thing I've seen in a while, and that's ETH_Ben here creating a meme coin after the successful meme coin known as Ben, which BitBoy Crypto took over. And you can see here to participate in his presale, you can go ahead and send him Ethereum with a minimum of 0.03 and a maximum of 5 ETH to his address here of Ben ETH. If we look at this wallet, Ben ETH, we can see this person has raised almost $6 million from presale, which is absolutely insanity. First most insane thing about this is this person has raised $6 million, first of all, in the depths of a bear market. He's raised those funds directly into a personal wallet, the same wallet that even holds this Bored Ape NFT. The whole point of meme coins in the way that you make profit is getting in early before they have this parabolic move to the upside where they're worth millions of dollars. But if you're starting at a bar where you're already going to have a coin with a market cap in the millions. I don't really see a lot of potential upside here. It doesn't make sense to get involved, and I'm really surprised that people are still sending money to this. I've also even noticed that people are sending money from exchanges like Coinbase. Even he's explicitly asked them not to, because there's no way he can airdrop this token to you. So he'll have to then figure out how to refund those people as well. And there could be a way to play something like this. I think when he launches the coin in the liquidity, you're going to see people dumping on each other. The price is going to crash dramatically. Look for the bottom, try to buy in, buy the bounce, and then get out. But other than that, I wouldn't be too bullish on this, but we'll see what happens. Next thing here, we have Curve Finance. Of course, one of the most respected protocols in all of DeFi is finally launching its Curve USD contracts. You can see here that you can mint it with Frax ETH as collateral. Is capped at 10 million. But this is awesome to see them finally make this project. Huge innovation for the stablecoin area. And after years, we finally have Richard Hart announcing Pulse Chain. I honestly thought this might not even ever happen, but here it is. You can see everything is live. You can add it to your MetaMask. You can come over here and bridge. Right now it's in testnet v4. You have to wait another day or two depending on when you're watching this. But you can see the Explorer is live, and chances are you already have some tokens in your wallet. This is the exchange here, Pulse X, so that you can go ahead and be ready for it. And at this point, it looks like everyone has abandoned the old Uniswap v2 AMM model. Uniswap's v3 license has expired, and so you're starting to see projects like SushiSwap fork it, and they just announced their own concentrated liquidity v3 pools. Pendle, one of my favorite projects that lets you buy crypto at a discount, has introduced a new pool to allow you to stack liquidity, which I thought was really unique, so I wanted to touch on it. You can see here that Pool 3 takes liquidity to the next level, allowing LPs to stack more yield on the same assets you already have. We have some pretty juicy APYs here, up to 333%. Definitely check it out. In this section, we're going to talk about Ethereum Layer 2s and LSDs, and one of the biggest things is that Ethereum had some performance issues this week. You can see they had some issues with finality. Overall, everything's fine, and Ethereum continues to function as normal now, but this has really been the first issue we've seen since the Chapella upgrade a few weeks ago. You can see here that when blocks aren't being finalized, it's possible that pending transactions might be out of order or dropped, which would obviously cause some issues there. And on the bright side, it looks like Lido, who is the largest liquid staker for Ethereum, is going to go live with withdrawals May 15th. So something to look forward to coming this week. I'm expecting a lot of these withdrawals to rotate into other providers. You might see ones like Rocket Pool and Frax specifically start to continuously increase their share as they've done over the last few weeks. And other big news in the LSDs is now we have CBETH is now going to be available across multiple different chains, right? Mainnet, Arbitrum, Optimism, Polygon, and it looks like they're getting more into the world of DeFi, different strategies. So that way you have more options when using CBETH, such as Aave or other things like that. Talking about layer 2s, I want to talk about really quick Arbitrum and what they've been able to accomplish, because they are killing it by generating so much money in fees. And right now, unfortunately, none of those fees do go towards the ARB token, but I am bullish the ARB token. And I think even if there's a hint that they have possible revenue share in the future, this could really send this thing off exponentially. You can see here that the Arbitrum DAO has accumulated over 3,300 ETH in revenue, and that the sequencer will refund about 5,900 ETH. And in the world of NFTs, something I never thought I'd put on my bingo card this year is Elon Musk tweeting a milady. And if we check out over here on the OpenSea collection, we can see this skyrocketed the floor price for very short-lived, all the way up to 7 ETH, if I can get my mouse over it. And has, of course, kind of come back down to more of where things were prior to that. Because of the Binance NFT marketplace supporting Bitcoin ordinals, to be honest, I'm not too bullish on what's happening over on Bitcoin lately with the ordinals and the BRC20 tokens and everything like that, but definitely something to be aware of, because there's always opportunities to make money in this market, and even if you aren't bullish in the long run, could be worth looking into now. And finally, to wrap this up, we have Pudgy Penguins leading a seed round, raising over $9 million. I truly believe that this is probably one of the most exciting NFT projects in this space, truly trying to build an identity outside of Web3, and I think definitely keep your eyes on them. And if you've stuck around this long, please drop me a comment below. Let me know your thoughts on this new weekly series of everything you missed, because I really want to understand if this is bringing value. Did I cover too many things? Did I talk about the right things that you care about? Or did I miss some pretty big things that happened last week? So your feedback would be so important and valuable to me to make sure that I can bring you the latest alpha every week. But as always, hit that like button, subscribe, come join the completely free community Discord. See you in the next one. Cheers and happy farming.